Yo, welcome to the long and short. This is your boy Maestro. Thanks for tuning in. Every day we like to give some price action trading techniques, some deeper dives into crypto. We're going to take a look at some altcoins today. Lots of information that we're going to bring to the table. If you do like what you hear and see today, go ahead, like, subscribe, become part of the journey with us. We will be also doing some live trading on the spot. We're going to show you guys how we get into and out of positions. Lots to show here. Thanks for joining. All right, let's take a look at the current market cap, which is sitting right now at around 2.05 trillion. Positive increase from over the past couple of days. Again, as you can see, with Bitcoin, you have very similar confluence that happened with the market cap as well, right? There was an order block essentially here, the equal lows there. Okay, so price didn't break through it, but it did come to accumulate within this order block before a push higher. And that directly translates itself into the Bitcoin price, as we can see with this price movement here. Now we're starting to look like we're having a bit of a down day. Okay, we've already printed the wick. So price may actually trade right back down into this range, which again wouldn't be surprising to me, right? We said this yesterday. If price were to come back down into this range, essentially we're creating new highs, new lows within this range. Okay, price still does have the possibility that it wants to go lower to take these areas of liquidity out here, both at 38 and at 36. Now, how are we going to gauge this over the next few days? Because if price is trading in a range, it's not really giving us a directional bias to go from. We gain our directional bias in a few different ways. Okay, so whether or not we're going to be pro long, pro short, depends on a number of different things, not only price action. Okay, so price action is the leading indicator of what we want to see. We understand that we have certain rules when it comes to price. So just like you see here, whenever you see two equal lows or a low broken, price has the right to reverse. What are we seeing currently in price? If I were to go into the hourly chart, okay, I'm seeing here, if I were to spread this out a little bit, okay, price had a series of snatches to the high side, okay? Now, remember we called out these equal highs here, okay? I told you that these were the next equal high levels to go get. Price went to get it aggressively, right? So this was the breakout the other day, okay? Then price broke this high again. Look at automatically what it's doing. It's dumping off, okay? So liquidity from the top side, dump off. Liquidity from the bottom side gets taken. We have the right to rally. All right, so these are the things that we look for in price action, but we also need additional confluences to come into place, not just these levels. Where do we find them? Well, this is why we look at things like the fear and greed index, right? If it's at 21, the market's fearful. Any down pushes is going to create more and more and more fear in the market, right? Last week we were at 15. That was the extreme fear point. So how are we gauging our plays? Right now, if everything's in a range and nothing is really trending, then we're using those techniques that we showed before. Equal highs get printed, equal lows get printed. We're looking for violations. We're looking for stop loss runs. We're looking for that, right? Once we see that, we're able to place a trade in the opposite direction. So for example, I took the short yesterday here, okay? And I wrote it down to there. Okay, it's not showing up. This was an actual trade. It's not going to show up on paper trade. But these are the things that you're able to do in this market, even if it's very short term. Okay, guys. Now, this is a move right here that you definitely could have caught if you would have worked off of this liquidity grab here. Let's dive a bit deeper into the futures charts because this is where we're going to start to gain our bias. If I look at price has been going downwards. Okay, so my bias automatically is going to be bearish. But when should it turn bullish? Well, there's certain indicators that will give you a heads up, all right? All indicators are essentially lagging products, but there are some that work a little bit better than others in regards to getting an idea of where price may want to go, okay? So we're all familiar with price charts, right? You have a moving average here, which I don't use very much. You have something called a trend spotter here, which identifies when trends are actually starting and places levels of sort of support or resistance. So right now, trend spotter is saying that you have a resistance level at around 50K. There are confluences on the chart around 50K, which gives me an idea that price may want to reject. What are they? If we go to Bitcoin, we can look. If we scroll down, right under 50K, what do you have? An imbalance, another imbalance. So right now, this could serve as sort of a resistance point because once you break all of these equal highs, this staircase equal high, right? You take all of this liquidity, this does have quite a bit of money sitting up here to push the price back down, if that's the objective. Moving down, let's talk about some more of these indicators, because it's important to understand where these things lie and how to actually use them. So we'll talk about how we'll be using them moving forward, okay? Open interest is very high right now, and as we can see, that is correlated in the actual price movement and the volume, okay? When open interest is high, we want to be on the lookout for movement a couple of months later, because remember, this is options, okay? Options get exercised, not today, some of them do, but they're going to be exercised a month out, 2 months out, 3 months out, 4 months out, right? So these are the things that we're looking for. There's a lot of interest right now in what's going to happen with the market moving forward within the next few months, right? I think everyone's interested in what's going to happen within the next few months. So open interest is starting to climb. Now, when we look at accumulation and distribution, we're not looking at whether or not the market is accumulating or distributing and then making a decision on that. We're actually looking at divergence for this. So one good example of it is here. You have a low and then a higher low on the line. But if I come directly up, I see the low and a lower low here. The very next day after this divergence printed here, price rallied. Now, this would have been a great play, especially if you were playing the liquidity play that we make, right? Broken liquidity here, you can see the spike down here takes out all of this liquidity here, and price has the right to rally. If you can combine that with the divergence, then you have a very strong confluence that price is going to move. And this is what we see here. The next thing down is what we call the elder ray. Now, the elder ray is probably the coolest indicator on this chart. And the reason why I say that is because you can take a look at this to see who has the power in the market. So when bulls have the power in the market, this is when you're going to go on your rallies. And what you want to watch for are crossovers over the zero line. Let's take this little area here, okay, and let's apply this to the price chart to see what actually happened. This was right before the big rally, all right? Right before this big rally, the bulls took power over from the bears. If I'm on this horizontal line right here, I can see the bears were losing steam. The bulls were starting to gain a bit of steam, and then they crossed over in a very strong way as the bears were relinquishing power. Eventually, they just gave it up, and that's why price went on this rally. Now, what happened when it started to come down from this point, okay? Let's just scroll right down to see. At this point, the bulls, look at what they're doing. They're relinquishing the power. The bears, they're trying to take power back over here. Boom, they drop down, and once you see this cross below the zero line, this is where the bears actually take back over, and this is where you're going to see the decline in price. So what are we looking for? From day to day, we're trying to see whether or not these bulls can push over the zero line at the same time that the bears do. Price may rally aggressively from that point. So these are things that we're going to be watching for in the market. And just like pushes to the upside, we're watching for conversions to the downside. Once the bears cross over to zero and the bulls cross over as well, you're expecting bearish activity. PVT, OBV, they're basically price volume trackers. And the way that you like to gauge these is whether or not they're pointing up or down. This gives you indication on whether or not you're going to have a bullish or a bearish day. These are said to be sort of leading indicators, okay? I don't necessarily look at any indicator as a leading indicator, but these do give you some good gauges on whether or not price should be moving up or moving down. If they're moving sideways, right, then we can expect consolidations, and that's the way that you would play these two here with each other. And then, of course, the money flow index and the momentum, right? When momentum is moving higher, then that means that we're on a bull trend. Money flow, you're just trying to see how much money is coming into and out of the market at any given time, right? So using all of these different indicators here will give you a bias. That bias should then be attributed to what you see here with the commitment of traders. Large speculators are net short. Retail, or the smaller specs, were net long. Commercials sitting right in the middle. Even the implied volatility is low for now. We're expecting that to increase though. So when your implied volatility is low, not a lot going on in the market, everything's being squeezed, even on the EMV, right? This basically tells you what is the ease of movement in price. If price moves up and then it gets rejected, it'll push back into a range, then there's no real ease of movement, okay? Essentially what we're trying to see is when the bears will pull away, the bulls take charge, you're going to see this move, okay? Just vice versa, the same way. If the bulls give up and the bears take charge, then you will start to see this move, okay? And that ease of movement will dictate how volatile the price actually gets, all right? And then your close location value is essentially an assessment of where we think price may close on the actual day. Right now, it's still sitting above zero, but as you guys can see, we have been getting a pretty hard dump, okay, so far to kind of encapsulate all of this action that we had from last night. All right. Now, here's the thing. Looking at all of this stuff is not going to give you a directional play. All right. You have to also use the price chart. Okay. This will give you a bias. This will tell us, okay, we're bullish here. We're bullish here. Okay. Somewhat bearish here because the bears still have control. Okay. The PMV is sideways. The OBV is sideways. So that leaves us sort of neutral. Okay. This is angling up, but we're not getting a lot of bullish movement. This may come in the future after this push down is done. This is what I'm looking at here. The money flow index shows me that money's coming out of the market, not coming in. So that's bearish. Okay, more momentum starting to angle down. That's bearish. If I'm looking at large specs, they're bearish, net short. Okay, implied volatility is low, which means that there's not going to be a ton of volatility going on in the market at the moment. The EMV is squeezed, which means that whatever bulls do, bears are counteracting. Whatever bears do, bulls are counteracting. And the closed location value is saying that we may have a bit of a bullish day, but that is not guaranteed. Take all of this information, and this is how you base it on a trade. So if I were sitting here, right, actively trading, I would have taken that information. I would have saw that the bears still have a bit of control in this market, and I would have played this short off of this extension grab higher. Okay, we played it last night. We would have played it again today, and as you can see, this would have been a positive play. Okay, this is the type of analysis that we're aiming to give on this channel. Take a deeper look, gain a bias on what may happen over the course of the day or next couple of weeks or next month, etc., and then apply our trading to that. All right, now let's stay on the charts for a second. I do want to cover a few altcoins, right? This is the way that we're going to break these down because I think that this is also important to cover. One thing that one person told me is you cover Bitcoin too much. You need to cover altcoins too. So I said, okay, no problem. So the way that we're going to cover altcoins as well is basically through our buy low, sell high strategy. If you're interested in that strategy, I'll leave the link below in the description. You can check that out. This is something that I think is very powerful for people who want to hodl in the market, right? This is not for guys who want to sit there and actively trade, swing trade. Not for you, right? This is for people who want to hodl, right? Finding good buy opportunities and good buy areas versus sell areas, right? And sell opportunities. So we break this down essentially into 4 blocks, okay? The first zone up here is premium. This is your second premium zone. This is your first discount zone, second discount zone. Whenever your prices are flowing in discount zones, they're good buys compared to historical price action. Whenever they're higher in these premium zones, they're good areas to take profit. So just ask yourself, if you bought, right, Link below $20, right, would you be selling it at 25? No, but you definitely would sell it at 36 or above 41 or even at 52. So these are the things that you want to consider when you're getting into trading. Most people don't see these charts this way, which is why they're always buying at the top, selling at the bottom. Okay, so what we're going to do is analyze this from this perspective, and over time we'll gauge to see whether or not we're making the proper calls and whether or not we're making things a lot easier for people to understand when the buying opportunities and selling opportunities are presenting themselves per se. Okay, so let's start with Chainlink. Chainlink is in a discounted zone at the moment, okay? And I think that Chainlink is a very good buy at 25. Once it creeps over $30, though, I'm not so inclined to buy it. If, in fact, Chainlink were to drop below $19, I would say it's an even better buy, and I would allocate a bit more to it, okay? Store J, pretty much the same situation here. Trading in our second discount zone. Anything above $2 and maybe 15 cents is not a buy for Store J. I would want to buy anywhere between $2.15 to $1.20. That's a good buy, and anything below $1.20 is a good buy for Store J. For Filecoin, Filecoin's been super suppressed over time, okay? And I think that this is another coin that can actually explode in a bear market, right? Once the market cap starts to get a little bit higher and people start to push Bitcoin up higher, Filecoin will have a run, and it may be a very impressive run. As you guys can see here, you see how hard this thing launches when the money does come in. So be aware, Filecoin right now may actually be a good bag to get. Not financial advice, but this is something that we're definitely already holding, okay, for the long haul. Engine token, metaverse token, okay, again, at a pretty good price within a discount zone. We see that this is actually viable right now when previously it wasn't that much, right? I mean, it was starting to push through all-time highs. It did break all the way up down to $4.85, I believe, right, on Coinbase, and then it came back down. So right now, it's actually trading in a pretty good discount zone, I would say. Your momentum is to the upside, and this is probably a good buy to get into. Algorand itself has sort of pushed and traded in a premium zone for quite some time. This is when Bitcoin was sort of having its rough time. And I think that Algorand right now is actually in a discount zone. So it's probably something that you may want to take a look at getting into. But I want to see this fall a little bit deeper before I actually go and buy Algorand at the moment. Okay, the graph is actually in a deeper discounted zone, has been accumulating here. And again, I think that this is a project that has a lot of life, a lot of legs. We're going to need ways to index the blockchain. And the graph is pretty much the only folks that are really doing it, right? So ultimately, I think that this project has a lot of room to grow, a lot of upside. The previous all-time high was sitting at 289, right, on Coinbase. Right now, price is at 59 cents. You definitely have a chance to 3, 4, 5 extra money when it comes to the graph, if in fact it does push through to this all-time high. Again, pretty good buying opportunity here on the graph. For CRV, it looks like we just broke our all-time high recently, and price did come back down to sort of fall back into this premium zone, right? So ultimately, not the best buy right now for CRV, unless you already had a bag, etc. I would say that you want to go ahead and dive deeper into CRV once this price comes down a bit. When it comes to Cardano, again, very, very, very discounted price. This looks manipulated to me. This is just too hard of a push down in a way that really had no upside to it, okay? So when I'm seeing this in price, I'm starting to get a little bit suspicious in what's going on in the background. But again, Cardano, excellent buy at 126. Previous all-time high was 309. You have about a 2x here if, in fact, Cardano does push back up to an all-time high or a premium zone. All right, let's take a look at some things that I'm watching, but I'm not necessarily into. Polkadot is one of them right now, trading in a discounted zone. I would say that Polkadot is a pretty good buy as well. Shiba Inu is one that I'm looking at as well. Again, in a discounted zone, could be a pretty good buy, but I actually want to see Shiba Inu drop lower, right? Before I get into any meme coins or things like that, I want to buy it at its lowest possible price so that if it continues to dump on me, I'm not that affected, right? Of course, I'm setting stop losses with all of these. Matic, let's see. Matic is trading at a premium, so I wouldn't necessarily be ready to jump into Matic. I want to see it retrace either back down into the lower premium zone or a discounted zone before I actually take any positions here. Sandbox looks like it's trading right in the middle of its range. I didn't draw the Fibonacci tool out on it, but the easy way to gauge this, guys, is to take a Fibonacci tool, come to the bottom area of your price, okay? It's probably here, but to me, this isn't enough price action information for me to really gauge this. But what I would do if I wanted to was I just take it from the bottom. I grab my Fibonacci, grab it to the top, and then I would see where we are in relation to the 50% line here, okay? At 50%, we're trading above it, which means that we're premium. We're in a premium at this point. So I wouldn't necessarily be buying this. I would want to see it come back down some more before I actually put any type of equity into this. All right, XRP. XRP has been getting sort of depressed a bit as well. So when we look at XRP, we can see that it is trading somewhat in a discounted zone. XRP, I think, is an excellent buy opportunity for it now. This is the lowest it's been in a while. And as you can see, this does have strength. This does have the proper people involved with it. It is the fastest network when it comes to transactions and the cheapest, right? So XRP has life. It does have future value. Whether or not they're going to try to kill it with this SEC lawsuit, I don't think that's the case. It makes it too easy to do things for these banks, okay? So I think that ultimately XRP is going to be fine. Right now, it's a good buy opportunity at 77 cents. If it does drop below 65, I would say put a nice decent sized bag into it. But again, this is what I'm doing, not financial advice for you. Let's see, we didn't draw the chart out for Solana as well, but we can easily go ahead and put a fib on this to see where our 50% mark is, and currently Solana is sitting right at that 50% mark. All right, anything below, I would say 150 is a good buy for Solana. Okay, I think that they are definitely going to continue to grow. Let's look at Mana. All right, here we have Mana again trading in a discounted zone. Let's look at Harmony One. Harmony One trading at a premium, right? So you guys are starting to get the examples of how we're walking through this, right? All we're doing is setting up premium discounted zones. We're buying at the discount. We're selling at the premium. This is how you play this market, guys. Continuously, continuously, continuously. You can do this all day long, right? Starlink is another one that we're looking at. Serious discounted price right now for Starlink, okay? Secret token, something that we talked about the other day, okay? I think right now, if I were to draw the fib, this isn't enough price action for me, but I would think that this is starting to creep more into the discounted zone, right? If you're at the bottom of the price, you're at a discount, okay? Why? Because this is what historical price action has showed us, right? And again, if we're looking at, what is this, Live Peer? Live Peer is something that I think you guys want to check out. I'm actually going to give you an example of the website in a second, but yeah, they are also trading at a discount. Live Peer, I think, is an excellent buy right now in regards to altcoins. Not financial advice, but this is something that I'm definitely taking a look at. Let's go to the website itself for Live Peer because I think this is a pretty cool project. One of the main things that I like to look at for cryptos is whether or not they're actually solving a real world problem. Okay, if they're just there for whatever and they're not solving a real world problem, I have less faith in them. My attention automatically goes away from it. So Live Peer has a solution here that seems to solve a problem when it comes to video streaming, right? Most people are on YouTube, but you also have to understand that there are companies that want to build their own streaming services into their technologies. In order for them to do this, it's very, very expensive, right? So the blockchain itself is offering a solution to this in a number of different ways. For one, is decentralizing the fact that, you know, all of our videos are on YouTube at the moment. If YouTube were to go down today, every single creator will be affected, okay? All of us. But decentralizing something like YouTube is actually a very good idea in the long run. So Live Peer is taking a crack at trying to attempt to do this, and they're doing it in a way that's actually reducing the cost of live streaming, you know, and encoding and all of these things that happen in the background that you don't necessarily pay attention to when it comes to your streaming content, okay? So very interested in Live Peer. Go ahead and check them out. I think that they are an excellent platform. They seem to be doing things the right way. I'm going to do a bit more research on these guys, but this is one that I think you want to check out moving forward here. All right. The website looks a little funny, but you know, at the end of the day, it's really about what they're trying to accomplish. And what I think they're trying to accomplish is something pretty cool. Now, let's talk about Wall Street, because we can't talk about crypto nowadays without talking about Wall Street. Okay. Now, I found this article on CoinDesk, and this does give me a bit of worry because I'm familiar with how these guys work. Okay. They are not the cleanest folks in the world. They don't have our best interests at heart as retail investors. Really, all they care about is their bottom line and potentially some of their clients, right? Other than that, these guys are all about the money. So what does Wall Street like to do whenever they see a hot market? What do they like to do? They like to create products in that market. So take the housing market, for example, right? The housing market was a market that nobody ever thought could crash. It's something that the American people want, the American people need. You find value in home ownership. There's so many reasons why a person will want to own a home. And what they did was they took that logic and they manifested it into a beast with all of these different investment vehicles and ways for you to get loans that you weren't necessarily supposed to be able to get. And then they crashed the market intentionally. On top of that, they bet against the housing market and made money in the process. Just that alone, right? That event alone is the reason why Bitcoin was actually created in the first place. If we understand that these folks are pretty grimy in the way that they do business, and what their end goal is ultimately is just for us to put all of our money in their pocket, right? They will create products that assist with this, okay? So this is something that I think we need to pay attention to because it's a deeper level here that most people won't be able to see, but you should know that's going on, right? So let's cover the highlighted pieces and we'll discuss it a bit and then we'll get out of here, okay? Asset managers are launching innovations to offer differentiated access to crypto. Basically what they're saying is that if you don't want to go on Coinbase, if you don't want to go on Binance, if you can't get on the internet or download a phone application, try this, right? And essentially this, the big shiny object, is something that's so financially complicated that the normal retail investor won't be able to understand it. If they're confused about what's happening with crypto, don't think the language is going to get any better on Wall Street, folks. It gets worse, way worse. So confusing, in fact, that you just say, you know what? go ahead and do this for me. I really don't care. As long as I'm making returns every year, you guys can do what you want. And that's what most investors are going to do when it comes to these products, right? People who don't have the exposure to crypto, that want the exposure to crypto, but don't want to take the risk, this is where they're going to go. So there's two products that they're looking at. One from the CBOE Vest, the other from Thor Financial Technologies. Two different things, okay? And then there's something that Thor is doing in a partnership with SMA. Now let's talk about these guys because I'm going to show you how they play. It's very aggressively, okay? So the first solution is the mutual fund solution, right? Eliminating the need for a Bitcoin wallet. These are for the 70, 80-year-old guys that want to retire, don't have a lot to do. They just want to take a little bit of risk in the market, but they want someone to manage that risk for them. This is how they're going to manage it through a mutual fund. If the volatility is high, then the fund will decrease its exposure to Bitcoin futures. If the volatility is low, the fund will increase its allocation. So it's dynamic allocation to Bitcoin futures adjusted on a daily basis, right? So what they're saying is if the volatility is really high in the market, they're not going to be playing the market. When the volatility is very low in the market, that's when they're going to take more aggressive positions, right? That's the way that a mutual fund is going to play the cryptocurrency market. So what does that give us, right? It gives us a bit of an idea of how the larger money will be moving when the volatility comes in versus when it won't. Also, the SMA answer. The strategy, which launched in 2021, moved out of Bitcoin at 62,000 to 100% cash position, sparing its investors much of the token's price decline, said Brad Roth, founder of Thor Financial Technologies. So what they're telling us here is that when we get closer to the all-time high, guys, we're taking it all. We're not leaving in 20%. We're not leaving in 10% for a runner. No, we want all of the capital, right? So don't think that next time we reach an all-time high that these folks won't do this again. And in fact, once hedge funds and bigger entities start to see other bigger entities selling, that's their key. Here's a good point here as well, right? A guy named Dan Erie also said that, if investors just simply held their crypto, if you bought anything over the past couple of years and you held it, you're probably in profit at this point, which is a good point, right? I bought Bitcoin a year and a half ago in profit, bought Ethereum a year and a half ago in profit. I bought Mana a year and a half ago, sold it like a dummy, but I did it, right? At the end of the day, this is what he's saying. If you just hold it, buy it, hold it, you look away for 10 years, when you come back, as long as you're in proper blue chip cryptos, you're going to make money with that. Here's the final line that I think really needs to be pointed out and highlighted here. Wall Street wouldn't be Wall Street if it didn't take a straightforward investment and attempt to wrap it in many different packages to meet investors' needs, said Sarson. While some of these products will make sense, others will make more sense for the issuer than they end up making for the client. Jump right back to the housing market crash, guys. As deep as they want to get into this space, we have to reject some of it. You just have to be careful when you're playing with these guys because these guys do not like you. They do not like us at all. They want to take all of our money, and that's their objective every single day. With that being said, let's go ahead and close out for the day. Right back at the market cap, which does seem to be struggling a bit to break out of the range that we said here. Okay, looks like it's starting to come back down a bit. So maybe a sideways day. Maybe we may still continue to flow in these ranges as we've said before, but that's the market. So hopefully you guys have found this information useful, valuable. If you do like this insight, we're going to be diving in like this every single day. So if this is something of value to you, go ahead, hit the like, subscribe button. Join us on our journey. This is The Long and Short, and it's your boy Maestro. Thanks for tuning in. Salute. We're out of here. Peace.